Welcome back to Asean Business Report, and for this break, we'll be looking into international economic news, starting off with the U.S. Talks at the White House try to break the deadlock over the U.S. national debt have broken up without agreement. President Barack Obama and congressional leaders have agreed to resume the talks on Monday after it did not produce any new deals. Obama is struggling to gain support for a budget packet that would cut the national debt by $4 trillion. U.S. government currently runs a $1.5 trillion budget deficit, requiring it to issue debt in the form of treasury bills, bonds, and other securities. U.S. Treasury Secretary Timothy Geithner was adamant the decline for the 2nd of August deal could be extended. He warned that there could be a catastrophic damage to the U.S. economy unless the Congress agrees to raise the national debt ceiling beyond the current $14.3 trillion. A top Senate and House of Representatives leaders met unusually on a Sunday in the cabinet room of the White House. As the talks got underway, Obama was asked whether they could work it out in 10 days. The Republican Speaker of the House of Representatives, John Boehner, said on Saturday that he favored a less ambitious target for the debt reduction of $2 trillion. If no agreement is reached, the government will effectively start to run out of money to pay civil servants, government contractors, pensioners, or holders of government debt. Economists and the White House have warned that such a default could push the country back into recession and have a global economic impact. Experts have their speculation that there would be another round of federal easing policy, or QE3, likely to come by fall this year.
And for the second largest economy, China, imports has slowed in June as the government's attempt to sustain the domestic demand continued. Imports to China grew by 19.3% in June compared with a year ago. Government data shows a sharp decline from the 28.4% surge in May. Exports rose by 17.9%, a slowdown compared to the 19.4% rise in the previous months. China is the world's second largest economy and the biggest exporter. The weaker than expected number results in a trade surplus of $22.3 billion in June. David Cohen of the Action Economics in Singapore said the import figures were below expectation. He added that perhaps we are experiencing some reflection of loss of the momentum in China's growth. Cohen said that the recent measures by China to tighten its monetary policy were starting to have an impact on the pace of growth in the country. He indicated the figures were consistent to the decelerating growth with the soft landing that many people are looking for. Analysts are concerned that domestic demand is also being hit by rising consumer prices in the country. Data out on Saturday showed the inflation in China hit its highest level in 3 years as prices rose by 6.4% in June compared with a year ago.
Now let's take a look at Asian stock futures, where Japanese and Australian stock futures fell as the weakest U.S. job growth in 9 months dimmed the outlook for a global economic recovery, pushing down the prices of metal and crude oil. American depository receipts of Toyota Motor Corp, the world's biggest automaker that counts North America as its largest market, dropped 1.2% from the closing share price in Tokyo. Those of Kyocera Corp, a maker of solar panels which gets 17% of its revenue in America, retreated 0.9%. Those of BHP Billiton Limited, the world's largest mining company and Australia's #1 oil producer, sank 0.6% after oil and metal prices dropped. Futures on Japan's Nikkei 225 stock average expiring in September closed at 10,045 in Chicago on July the 8th, compared with 10,160 in Osaka, Japan. They were bid in the pre-market at 1,040 in Osaka at 8:05 a.m. local time. Futures on Australia's S&P ASX 200 index fell 0.9% today. New Zealand's NZX 50 index slid 0.2% in Wellington. Investors had high expectations for the U.S. employment data, but they were disappointed by the results, said Toshiyuki Kanayama, a market analyst at Tokyo-based Monex Inc. Investors will be looking to take some risk off the table, so there is no way you're not going to see some selling. Futures of the Standard & Poor's 500 index lost 0.6% today. In New York, the index dropped 0.7 to 1,343.8 on July 8, as the weakest American job growth in 9 months hurt companies most closely tied to the economy. U.S. payrolls increased by 18,000 in June, less than the most pessimistic forecast in a Bloomberg News survey of economists, which called for a growth of 105,000 on average. The jobless rate rose to a 2011 high of 9.2%.
Indonesia's central bank may probably keep the interest rates unchanged for the 5th month after the inflation eased, delaying an increase in a risk emerge of a slowdown in global growth. Bank of Indonesia will hold its reference rate at 6.75%, according to all 14 economists surveyed by Bloomberg News ahead of a decision due in Jakarta tomorrow. Policymakers last increased borrowing costs in February, the only move this year. The rupiah is the second biggest gainer in Asia this year, helping cap import costs and restrain inflation. That has allowed Central Bank Governor Darmin Nasution to extend Indonesia's pause in the monetary tightening as Europe's debt crisis and slowing U.S. growth threaten Asia's export, even as neighbors from Thailand and India and also China kept raising rates. The headline inflation slowdown provides some wiggle room to wait for and watch for now, said Vishnu Varathan, an economist at Capital Economists in Singapore. Still, policy tightening must resume as inflation risk remained, he said. Inflation in Southeast Asia's biggest economy eased to a 12-month low of 5.54% in June. Gains in consumer prices will likely continue to slow given last year's high base level, Nasution said this month. Indonesia's benchmark stock index has surged 37% in the past year on optimism the central bank's restraint in raising rates will help support growth and bolster earnings at companies including PT Bank Mandiri, the nation's biggest lender by assets. The Jakarta Composite Index rose above 4,000 for the first time on June 8th. Bank Mandiri shares advanced to a record, and PT Astra International, the largest automotive retailer, climbed 3%, leading gains among the banks and consumer stocks. Indonesia has become a favorite among investors, with consumer banking and commodity stocks being the most attractive choices. President Susilo Bambang Yudhoyono's government has raised its forecast for the economy's expansion next year to as much as 7% on raising exports and investments. Melkias Mekeng, head of the Parliament's Budget Committee, said on July the 5th. That compares with a projection of as much as 6.9% in May. Yudhoyono, who plans to double spending on roads, ports, and airports to $140 billion by the end of his term in 2014, unveiled plans last month to develop 6 economy corridors under the initiative to accelerate the growth and cut poverty in the period of 2025. The region will focus on industries including foodstuff, energy, plantation, fishery, and mining.
Oil declined for a second day in New York as investors bet that rising unemployment in the U.S. indicated that fuel demand may falter in the world's biggest crude-consuming nation. Futures slipped as much as 0.5% after Labor Department said July 8 that U.S. employers last month added the fewest workers in 9 months, and the unemployment rate rose to 9.2%, the highest this year. A report this week may show U.S. retailers probably stagnated in June. Crude for August delivery fell as much as 47 cents to $95.73 a barrel in electronic trading on the New York Mercantile Exchange and was at $95.93 at 8:50 a.m. Sydney time. The contract dropped $2.47 or 2.5% to $96.20 on July the 8th. Prices are 28% higher than the past year. Brent oil for August settlement declined 56 cents or 0.5% to $117.77 a barrel on the London-based ICE Futures Europe exchange. The European benchmark contract was at a premium of $21.92 to U.S. futures. The difference reached a record of $22.29 on June 15. U.S. payrolls increased by 18,000 in June. Labor Department data showed July 8th. The median estimate in a Bloomberg News survey called for a gain of 105,000. A Commerce Department report on July 14 may show an unchanged reading in purchases in June after a 0.2% May decrease, according to the median forecast in a Bloomberg News survey.
Now let's have a look at the metals. Gold rose, capping the biggest weekly advance since November 2009 as a sluggish U.S. labor market signaled that the interest rate will remain low, boosting the appeal for the precious metal to be the alternative investment. Employers in June added the fewest jobs in 9 months and the unemployment rate unexpectedly increased. Last week, gold gained 28% in the past year, reaching a record of $1,577.40 US dollars an ounce on May the 2nd, as the Federal Reserve kept borrowing costs at a record low to spur the economy. Given the anemic job growth, the Fed will not be able to raise interest rates, said Frank McGee, the head dealer at Integrated Brokerage Services, LLC, in Chicago. It raises the possibility of a third round of quantitative easing. Gold futures for August delivery rose $11 or 0.7% to settle at $1,541.60 US dollars at 1:43 p.m. on the COMEX in New York. This week, the price has gained 4%. Earlier, the metal reached $1,546 US dollars, the highest for a most active contract since June 23. U.S. employers added 18,000 workers last month. The median estimated in a Bloomberg News surveys was a gain of 105,000, Labor Department data showed. Hiring by companies, which excludes government agencies, was the weakest since May 2010. The unemployment rate rose 9.2%, the highest this year. This job number really throws the recovery on the back burner, said Adam Kloffenstein, a senior strategist at Lind Waldlock, a broker in Chicago. The dollar could face some headwind, and the Fed will have to do something to stimulate the economy. With the uncertainty, there is a need to have gold in the portfolio, he said. The central bank ended a second round of so-called quantitative easing last month and has kept its benchmark rate at 0% to 0.25% since December 2008. Silver futures for September delivery rose 0.7% to $36.543 US dollars an ounce on the COMEX. This week, the metal jumped 8.4%, the most since December. Palladium futures for September delivery fell 7.60 US dollars or 1% to $778.95 US dollars an ounce on the New York Mercantile Exchange. The metal gained 2.8% this week. Platinum futures for October delivery fell 9.6 US dollars or 0.6% to $1,733.40 US dollars an ounce. This week, the price climbed 1%.
We'll be back with a story of rising prices of sugar canes as well as a report on the Bangkok Symphony Orchestra in our next break.